And actually, I'm going to pull it up over here on my channel. Hello, we might be live. And it's Gregory and Ray, and we're just kind of waiting for everybody to caught me off guard. Welcome, everybody. I don't know if you're here yet. I'm pulling up another machine, so please bear with us a moment. If you remember Ray Tuck, our friend from Norstar Mortgage, as promised, we are live, and I'm just trying to get this. Bear with me a moment. As I said twice now, let's see here. I'm trying to pull up some questions that already came in. And we're going to let everybody join us. Take your time. All right, let's see here. Here will be the chat. You can see this here, okay. Ray, right? And then we can make an emoji. Let me put that there.
All right.
And then I'll put hello all.
Okay.
Double hockey stick. Hello. All right, that's cool. Now I'm just trying to find on our other machine here. Yeah, here we are here. And you can see us. We're going to have a little delay. Like if you can see my other computer,
right,
there'll be a small delay. See, I leaned back and I fixed my shirt.
Yeah.
So there'll be a little delay, but I'll just put that here. Let's just get that next to that. If anyone's here, please give us a heads up. Say hi. Doesn't look like anyone's joined us yet, but we literally just went live. It's literally 1 o'clock Eastern. We've been live for 1 minute and 16 seconds, and no one is here yet. Darn it.
And counting.
The plan is to proceed with, let's see what our pictures and our background. We should have been more thoughtful about that and put like an Eagles helmet or like a Phillies flag or something. I have some Phillies gear in my office. Maybe we can hang that.
We could have even threw up Taylor Swift. Since she's from Reading, right? And everybody's a Swiftie. We could have probably did that.
I'm definitely on Team Taylor as well, and she's as everyone's aware or not. It even made the yearbooks of kids' yearbooks. Her and Travis Kelce, who are an item, I guess, as of this minute, as of this live program, they're still an item. But Jason Kelce is an Eagle. Now he retired, right?
Correct. That's correct.
The center. And anyway, it was kind of bittersweet, but we love Philly. We love the Kelces and Taylor Swift. And Taylor, if you ever want to join us live, hey, you're more than welcome.
Definitely.
Just let us know.
If you need a house, Taylor, go see Greg Martire.
Definitely. All right, I'm just going to check one more thing, and then I've got a few questions already teed up. All right, and I got everything spelled right. And we'll make sure we'll get you Ray's info. So what kind of inspired us to do this is we had a fun time recently, Ray and I don't think even all the videos are out. We were actually sitting here. I might even have the same tie on during that video, but we were sitting here, we were talking, and we were trying to help buyers, home buyers, first-time buyers, second-time buyers, 10th-time buyers, investors, and with mortgage, we were discussing mortgages and rates, and everybody wants to talk about that. So we said, hey, let's go live because we had a lot of great feedback. And there are some questions that actually poured in. We're about 1:03. So I guess I'll give it like another minute just to see if anybody's going to kind of, because, you say if it starts at 1, most people get there at 1:05.
Yeah, you never know. You never know.
Plus we got traffic. So right now we are in Philadelphia. We're in Montgomery County, outside of Philly, at one of our Springer Realty Group offices. And boy, is it hot out. It's 84 degrees.
Yes.
And yes. I don't think we're technically in summer yet for another 2 weeks, right? Into June.
Probably not.
I think is a technical summer.
Some people look at Memorial Day as the kickoff day of summer, but it's technically not summer yet.
And that was last weekend. So we're beginning of June 2024. But it is hot out, and it's just going to get hotter. It usually gets the hottest around like 3-4 o'clock. So I think it'll go up into the 90s. We're like 84 degrees now. All right, let's get started. So we're at 1:04 p.m. I guess everyone can hear us. I see that going. I didn't even think of that. Let me just check one more thing. Make sure you can hear us. I have this muted.
Microphone check. Testing.
It's muted. Test.
There you go.
It's muted. Test. There you go. All right, cool. That's good too. All right. So everything's working well. Let's get started. So Again, this is Ray Tuck with Norstar Mortgage,
Yes.
our favorite loan officer. And we did get some questions in anticipation of this. So the first one is, okay, so which mortgage loan option would you recommend for first-time home buyers? So this is specific to first-time home buyers. And I think I'm sure a little bit of what he'll say is going to be for any home buyer. But which loan option would you recommend for first-time home buyers?
And I hate the stereotype, but sometimes, sometimes the FHA option is usually the best for first-time home buyers because it allows people to put 3.5% down. Because a lot of times as first-time home buyers, we don't have the funds to put down, and that makes a huge difference. So.
And thank you very much. It's good, good advice. Right now, too, the FHA rate is probably the best rate.
Yes, it is.
They call it the Govy loan, the government loans.
Yes, that's correct.
And the FHA is the housing, basically the administration of the government. Is it Federal Housing Authority?
Federal Housing Authority, that's correct. Yeah.
So it's a government-backed loan, which basically says if you don't pay, they're going to pay. They'll pay the bank. So and then your taxes go. But FHA, okay, cool. So at least amount of money down. Yeah, that's for another show and another channel. Although we can discuss, we certainly can discuss politics, and we do have an election coming up here soon enough.
Yeah.
All right, so FHA, I like that. Now, are there any other low entry options besides, let's say, FHA? Like what might our other options be?
One of them is the P. I always get the acronyms mixed up, so please excuse me, but it's the PHFA,
right?
I believe, where you can get up to 5% down towards your closing costs and down payment.
Yes.
That's huge. What I do caution people to understand though is whenever you're getting a grant, is to make sure you check with your mortgage loan originator and see how long that grant is for. So, for example, with the PFHA grant, again, I may have the acronym slightly off, but I believe that you have to be in that grant for like 10 years before you're not eligible, before you don't have to pay anything back. So when you're looking to refinance in 5 years, you would have to pay back some of that grant if you wanted refinancing it prior to the 10 years being up, just for clarity. And then some grants are the other way around, where they're only like for 6 months before you're eligible to refinance and so forth. So just make sure you have an experienced loan originator like myself
Hint, wink, wink.
to help navigate this for you. You don't have to be a specialist. Let us be the specialist.
I like that. And you do have it right. I like that loan. PHFA. And P is Pennsylvania.
Yes.
And H, Housing Finance Association. I forget, but that's administration. But every state has something similar. But
yes,
that is I just saw an alert. No, I thought that was something for us. Nothing. I'm plugged in. We're good to go. We got good internet connection. So I love that loan for 100 reasons. You get free money basically. And like you said, like Ray said, if you stay there, you don't have to pay it back. But even if you did have to pay it back, like who cares? As long as you can, you get free money for some time, then you pay whatever portion you didn't use back after some time. It helps you get to where you're going.
Yes.
Which is my big thing this year and last year too. Really since 1998 is like, we need to get you where you're going. Like the guy wants to buy the house, the lady that wants to refi, like where do you want, where are you going? Let's get you there. And that's a great product to use.
It really is, Greg. And it's like you said, one of the challenges that people have is that as first-time homebuyers it's the down payment and the closing costs, right? May not have the money. They might be able to afford the monthly payment. That's where the interest rate and the taxes and all that stuff, it matters. But it's like, hey, I can afford this. My apartment is costing me, $2,000 a month, right? So I can afford a mortgage. It's just the down payment and the closing costs. So you're going to be somewhere for a while, and you might as well take advantage of a grant if you can, And we can always talk to you about eligibility and so forth, what the requirements are. And it's not a lot to it, but there's a lot to it. Again, you don't have to be the professionals. Let us be the professionals.
Definitely. I like that. And then there are some conventional loan options that are low entry, right? Like meaning least amount of money down.
Correct.
5% down is very common. 10% down.
Yes, it is.
There's even some products 1%. And then what about any other, again, low or no and low entry? VA comes to mind. Now you have to be
Oh
a
yeah,
veteran.
VA, you have to be a veteran. As a matter of fact, I just approved somebody. I won't say their name, but I just approved them for a VA loan. And even with the interest rate at that day was 6.25.
Love it.
So that's really good. And it's zero down, as you know. So
Literally zero
mhm,
down, literally
yes.
zero. That PHFA loan does zero. FHA gets you close to 0. And with
Mhm,
a gift, with money from a family member,
mhm.
is also zero down.
Yes, money from a family member. Yes, and for people who don't realize it, in some cases, despite what you may hear about the economy or what you hear about the housing market, there have been some instances where people have gotten seller's assist. I did a closing last month, and they did get seller's assist from the seller. So that's huge too.
Definitely. And in Philadelphia, I mean, in Philadelphia County, it's very common. It happens a
Mhm.
lot. Not as much as in Philly, but Philadelphia's got what, a half a million homes or something. So anyway, and the average closings I think is like almost 2,000 a month, where Montgomery County, as an example, might be 800 a month. So they're not as rampant outside in the counties, but they definitely happen. They definitely work. Just make the offer. What I've seen in this market and any market really is you got to try where you keep making the offer. If you need the seller's assist, make the offer with the assist. You might have to make 20 offers, but you're going to get it.
Right.
It's going to work. All right, so let's see if anybody joined us. Doesn't look like it. That's fine. We're going to stay on about 30 minutes. If people want to come in and ask, not a problem. I know a lot of people come and check out the replay, so let's keep it moving along. If you have questions, please post them in the comments. You can always text us. We have Ray's information there. Make a comment while you're making things. Hit the bell. Hit subscribe. It helps us a lot. All right, so let's see. Next question that is came in from our live studio audience. Okay, this is a good one. What are the common fees and costs associated with getting a mortgage? So, common fees and costs associated with getting a mortgage. Take it away, Ray.
Right. So one of the common fees that you're going to see are obviously like an appraisal fee.
Mm-hmm.
That's one. And I actually have a list of fees here.
Oh,
Some
sweet.
of them, obviously there's a credit report fee. There's lenders, title insurance. I think Greg mentioned this on one of our other videos, is that there's a lot of people working behind the scenes that we don't that you may not realize as a seller and or as a buyer that make the magic happen for everybody. So you need to make sure that everybody is being compensated. So it's not about trying to get over or anything like that. Sometimes I think that there's a little bit of lack of transparency, and we want to make sure that we're being as transparent as possible. So when we're pre-qualifying people, we say, hey, here's a list of all of the costs for you. And some of those fees may be subject to change. Like, for example, an appraisal fee, there might be one appraiser that charges more or less than another appraiser. But obviously, we will make that adjustment before settlement. There's obviously the mortgage recording charge. Somebody has to record the mortgage. There might even be a wire fee for the bank to transfer the funds at settlement to another one. There's a lot of, not a lot of fees, but there are definitely more common fees. And obviously, there's like a brokerage fee as well that usually gets charged.
And these are costs that are not your down payment. These are closing costs.
Closing costs, correct.
There's in addition, and there's a transfer tax, which you have to pay transfer tax. Ray mentioned title fees.
Title fees, yep.
For like a template or a rule of thumb, whatever it is, like I use 6%. Now it's usually a little less.
Mm-hmm.
Now Philadelphia, though, they have a 2.14 transfer tax, so it's almost 6% total. Now that covers everything, all of your fees, everything he mentioned: appraisal, recording, also your transfer tax, your title insurance, all of it, processing,
yes,
deed recording, any brokerage fees. And what's nice about Ray and Norstar is, look, everybody has a fee, but they're not gonna jackpot you, and that's part of your experience.
Right.
Is my job, our job, is to make sure you have an overall great experience, which includes not getting hammered with unnecessary fees, but there are going to be fees. So around
Right.
6%, transfer tax, title, lending fees, recording fees. That's a pretty average number.
Right, and a lot of this, as Greg mentioned earlier, believe it or not, is some of the grants or the gift money can be used towards these down payments and closing costs.
Mhm.
So you may not necessarily have to come out of the pocket with all of these things. An important thing to mention too is that a lot of times as first time home buyers, we get frustrated, and I say we because I was a first time home buyer at some point, right? I didn't come into this just knowing everything. So just know that you're not alone. It's going to be frustrating. There's going to be times where you're like, oh my God, this is impossible. I urge you, if you really want a home, to just keep going. Your home is out there. It really is. Even when you watch those television shows, like you might watch one of those HGTV shows, right?
Mhm.
And you'll see somebody who has $1 million budget and they still have a hard time finding a home. It may be something that they didn't like, maybe it was a location, maybe it was the right location, but it didn't have this, it didn't have that. So you do have to make sure that you're being realistic with yourself about what it is that you actually need when purchasing a home, and just keep striving for that. If you ever need to talk, obviously you can reach out to your realtor, which I hope is Greg, and you can always reach out to me as well.
Definitely. And to that point, thank you for saying that. And it is true. We work well together and we work a lot together. But even if it's a second opinion, you just want to hear, hey, I'm already locked in. It's fine. We're not going to, well, why'd you call them? Well, I'm not going to answer you. We're going to help you
Right.
no matter what. We want to help because we want to see it through. um, uh, but Ray mentioned all those first-time homebuyer programs and third-time homebuyer programs. There's always opportunity to get
Right.
those fees paid for portionally by the seller, or maybe from a lender credit, or we could work it into the mortgage amount itself. All right, so I think that's cool. If you have anybody else, let me just check one thing.
Speaking of down payment while you're adding in, important to know, you cannot take a loan, you cannot borrow money for a loan to get more money for the down payment on the house or closing costs. So once you get the process started, don't apply for anything. Don't think, hey, I can go get $5,000, for a personal loan through my bank or somewhere else. Don't do it. That can affect your eligibility to buy a home. So don't do it. Just if the funds have to be tracked, we need to know where they came from. So
Thank you for saying that. And yes. I have seen where you're getting gift money. You have to track it. It has to, you got to follow the money. Where did it start from and how did it end up at settlement? You could work a deal with your family member that's giving you the money. Maybe you pay them back over time. It doesn't always have to be, no one's going to give me a gift. Well, maybe you work a deal with them. You work it out where it's affordable that you could pay them back. All right, so let's see. This is a good one. How can we get this question a lot? So how can borrowers improve their chances of being approved for a mortgage? What can you do to improve your status? Whether I can't get approved today or I'm already approved, but how can I get a better deal, a better rate? How can we improve our chances as borrowers for either getting approved or once approved, or what can we do to boost ourselves?
Right. One of the things we talk about, and I believe I might have mentioned it before, is millions of Americans, I'd say most Americans, have hundreds of thousands of dollars in debt and credit cards. And our biggest challenge is that a lot of times these credit cards are maxed out, right? And these credit cards might be at what we'll call say 90% utilization. So in simple terms, if you have $100 credit card and if you have $100 limit and your credit card is you have $90 you owe on it, you're at 90%, right? So what you want to do is you want to get that card down to $30, which is good, or you get it down to $10, which is great. And believe it or not, with just that small credit limit, that credit limit of $100, you get that down to 30 or down to $10, your score is going to jump dramatically, because with the credit bureaus, your credit utilization is what we're talking about here, counts as 33% of your credit report. Can you imagine? Just because you owe $90, that's 33% of your credit score. That's you only have 67% left. So you want to make sure you take advantage of that. Obviously, paying on time. Make sure that you pay your bills on time. You know, make sure you pay them on time. And a little tip for people: if you have an outstanding credit card debt, and again, I'm not a credit specialist as far as as far as that's concerned, but one of the things you want to make sure you do is you can reach out to somebody that you may owe money to and make a negotiation, right? And to have that item paid off. And if you get that item paid off for less than what it was, get a letter from them right away. Get a letter from them stating that it's paid off. Make sure the account number is on there, the same one that matches your credit report. I can talk to you about those details as well. I would have no problem coaching you through that, how to go about that process. I've seen people get things taken off their credit report, as fast as 30 days, especially with that letter, and getting things paid down, and then, getting them approved for homes. So those are just two examples of some things that you can do. Mm-hmm.
That's great. Thank you. That's awesome. And the credit, as Ray mentioned, is like the lion's share of it. It's the lion. It's a third, over a third of how the lenders will loan money.
Yeah.
So
and save money too.
Yes.
How can I forget? You got to save money, right? So put a little bit away. Greg and I were talking about this before we got on. So be realistic with yourselves. Just a little bit about my background. I worked in banking before, and one of the biggest mistakes I would see is somebody may get paid, say, $1,000 a week, right? They take the $1,000 and they transfer they'll transfer over, I don't know, $800 into their savings account and expect to live off of $200 for a week. That's not realistic. Do it the opposite way. Put $200 away. If that's too much for you, just put $50 away a week, little by little. $50 a week, that's $200 a month. That's $200 a month, $250 if it's 5 weeks in a month. And all of a sudden, by the end of the year, you've got a couple of $1,000s. So just be patient with yourselves. Be realistic in how you save.
Thank you. You know what? This is awesome. Ray taught me this trick. Because he was in banking and still is. If you need a savings account, go open it up at a bank where you don't bank. Like, it's hard to get to, right? Like, not like, oh, I'll never be able to find it again, or they won't give it back to me, but maybe it's down the street or farther away, or one of these internet banks that are, legitimate. Like, you start an account somewhere where it's not easy to get to. It's harder to go take it out. And yeah, $50. What about $5? How about $1? Like, something is better than nothing. That's the habit.
Yep.
Love that. We could do a whole series of videos on credit and tricks and things that are legal. And but we do have, Ray's very good at forecasting and giving advice on credit. And so is the rest of Norstar Mortgage as well.
Yes.
I do have some credit experts that we work with very closely, and they're excellent at analyzing and doing. One little trick with your credit utilization I wanted to mention is you could ask for a credit increase.
Correct.
Now, don't go spending it. The point is to get the credit limit higher so your utilization becomes lower, just
Correct.
As a matter of math. But don't go spending it. So get a credit line increase, your utilization goes down immediately, boom, your score goes up. But there are a ton of little tricks like that. And so we talked about credit.
Sometimes those credit card agencies, if you have a good relationship with them, they'll give you that increase if you ask them without even having an impact on your credit report. In some cases, not all, but in some they do. You can ask them, have that conversation like, hey, I like an increase. Will this impact my credit score at all?
And a lot, I would say all, I would like to say all, I think almost everyone I have anyway, and anyone that I talk to, they have it some way that you can look at your credit report without impacting it. You can pull it for free. They can give you, it may not be the exact score that we need, that Ray needs, but it gives you a report. It gives you information that you can analyze. So, and we could talk, for a few hours. We just have an ad alert because YouTube needs to make money. Google needs to pay the bills. So you might see an ad. Anyway, welcome back from our ad. I don't know how it works. I guess we're gonna put it in, or we're gonna be delayed a few. I'm just curious to see if they're showing an ad right now. Oh no, I think it'll be after the fact. All right, so we talked about credit is being like a third, basically, of what they. What are the other things that are, or what do they look at? What else do they look at?
Employment. How long have you been working somewhere? That's
Okay.
really key. If you haven't been working somewhere 2 years, it might be challenging for you. So, for example, I have some people that may come to me and say, "Hey, Ray, I have this job. I've been working here for 2 years, but I have another job where I'm working, where I've been working part time, and I've been doing it for 6 months. That part time job that you've had for 6 months is not. We're not going to be able to use that to help you. But if you had that part time job for 2 years, we'd be able to use it, especially if we got a letter from your employer saying that this is likely to continue. Again, you wouldn't need to know that right away. During the approval process, if we feel like we need that, we'll reach out to your employer, or we'll reach out to you as well and say, hey, we need a letter of this. It's like a letter of verification, like just to verify that the employment for these is likely to continue. It's the same thing with overtime. Maybe you're somebody who works for an organization like SEPTA, right? We all know SEPTA. SEPTA, sometimes the employees get overtime, and maybe somebody's been getting overtime consistently. So we'd be able to count that as long as it's been consistent and we get a letter from the employer saying it's likely to continue. Again, you don't have to ask for that right away. That's something that you let us make the decision on if we need it or not, and we'll reach out on your behalf.
That's really good. We do have a video on SEPTA, by the way, on our channel. Check it out. Hint, hint, wink, wink. Hit like, hit subscribe. No, thank you. That's very good. And what Ray said earlier is great. Let him be the expert. Don't assume I only been here 3 months, not going to work. Oh, I did this only in the summertime. But if you did it every summer for 3 years, they will calculate that in something. Let them figure it out. You bring it to us, and they'll do it the best that they can. With COVID and with other things, God forbid, in the economy, some people are laid off, and they may have been, we recently had a manager of a car wash. Well, now he created his own car washing business. Well, that's solid in the lender's perspective because it's the same industry.
Yes, it is.
So don't assume anything. You know what assume does? It makes I won't say it. This is a channel good for kids. We won't use that vernacular here.
Yes.
So income is important. Just bring it to the table, and even if you're making cash, right? You guys get letters signed by, like the employer will sign a verification type.
Correct.
So don't worry how you're being made. Just bring the money, and we'll work it out. So that's cool. So what's the other third? Credit. Income,
timely payment, or history, obviously.
Good.
Your credit history. So one of the things too is like, did you have a loan that you were actually paying? So there's lines of credit, but there's payment history as well. Just making sure you're not late with anything. When I say late, I mean, and I'm not encouraging you to be late at all, but if you are 30 days late on a payment, that's when they report you to the credit bureau. So if you're like a day late, or maybe your credit card company or your car payment, they may charge you a fee for being late, but they're not going to report you to the credit bureau unless you're 30 days late. So it's imperative that you're not more than 30 days late, because that can have a tremendous impact on your credit. Where you live too, how long you've been living somewhere. They want to see that you've been at a stable residence for years. If you're somebody who's moving around constantly, we may have to ask you some questions. Maybe just a simple letter. Maybe something happened where maybe you're in a field where you have to travel a lot and move a lot. A simple letter of explanation will probably help us again. You do not have to be the experts. Just bring the challenge to us, and we'll do our best to help you navigate to get to home.
Thank God, right? That's one thing you don't have to worry about is this. Definitely, you're in good hands here with us, with Ray. That's very good. Thank you for that. So, all right, we talked about, okay, let me see. Timely payments. One thing I wanted to say to add to the last part of this, and we can talk about this at any time. We're available. You can call us, email us. Yes. I have a Calendly link, Ray. We can text. It doesn't matter. If you did something wrong yesterday, don't worry about it today. We're going to move forward from here. Right. So if you can promise that yourself that you can make timely payments from today forward, and you can continue to do that, we can get you in a house. You just have to make sure that we can move forward, paying on time, the minimums, et cetera. Like,
Right.
oh, I had 3 late payments. It's never going to work. No, that's what I'm saying. No, don't worry about yesterday. Let's move forward.
Right. Don't assume every day
Don't,
that you wake
I
up.
love it. That's going to be we're going to have our own,
Don't assume,
what's it called? A webcast, a podcast.
Yeah. Every day you get up, you have a chance to make a difference and change the things that have happened in the past, So.
All right. So here's a good one. Now, this is specific to building a house. Now, you see a lot of new construction. So usually the builder, like if you see a neighborhood going up, cul-de-sac, whatever, the builder has a lender on site. But Norstar can help with that. This question is a little more specific, is if you have just one plot of land, you just bought one lot somewhere, and then how do you roll? Okay, so it's basically they either have land or are getting land given to them from a family member, or they're buying it, some variation of that. Now they want to at some point build a house. And then how does it, they say rolling. Okay, so rolling into a traditional. We did this recently. So Norstar had, and I'll speak for him for a minute, but they have like bridge loans. It's called a bridge, like between buying the land and building the house. So they will loan you the money based on a certain value of the house that's to be built. Now you need to put money down in this case. FHA won't work here, right? And
right.
Like it's more of a conventional thing. But banks, your local bank may lend you just on the land. You're going to have to put some money down, probably 30%. But if the land's cheap enough, it might work. So can we get you a loan to buy a lot and build a house at some point in the future? Yes. And at some point, it's going to become a traditional, as they put it, loan. And Ray's going to bring, he's going to bring the heat, but he's going to bring the mortgage for you. I think the house has to be 75 or 80% complete. Have an appraiser come out, and you're in like Flynn. So
like that in like that.
The process, it's relative. It's like, I need more information, but yes, we can do it. Call us and we'll make it happen. Now we're licensed together we are licensed in multiple states. But if you're wondering, I'm going to buy in Florida, just call us and we'll help you out. I'm not licensed in Florida. I don't think you are, right?
I'm not licensed in Florida.
Okay, but we have somebody there.
Yeah.
And I have somebody in every city, and I know Norstar, we have a network. So if you're wondering, I'm buying, even if you're buying out of country, we can help. So hopefully that answers, acquiring construction loan. And there is construction loans that are conventional as well. So it can work very easily. Mm-hmm. There's this bridge that's like, it's usually a higher interest rate for a little bit of time, and then you refi to a conventional
loan. That's correct.
Okay, cool. All right, so here's good. Ray, question for Ray. We're doing good here. All right, 32 minutes. If you could, this is good. If you could offer one piece of advice to young prospective home buyers, I'm laughing. Let's just call them prospective home buyers. We won't pigeonhole to be young, but if you could offer one piece of advice to young prospective home buyers, what would it be?
Wow, I have a few things to say about that.
All right.
Number one, it goes back to what we said earlier: save your money, save what you can, and be realistic to yourself. So if you're living at home or you're living with somebody and it's an okay situation for you, don't go out and get yourself the Tesla and things like that. You just need transportation for work. So, get yourself in a nice car that's functional. You don't need that because your goal is to get a home. So, write out a plan for yourself. Hey, my plan is to get this home. What do I need to get there? Okay, I'm going to save $50 per week or $25 per week, whatever it is, for as long as you can. Keep making your payments on time, obviously, but be realistic to yourselves. Again, we mentioned this earlier. You don't have to get a home that's a single home that costs, $400,000 initially. You don't have to do that. Get a home that's comfortable for you initially. It's your first home. It doesn't have to be a dream home. I think a lot of times it's first-time home buyers, and I was a first-time home buyer before too. I wanted the big house with a nice swimming pool and the garage and the white picket fence fantasy, right? Like we don't have to do that. Let's get ourselves a home in a nice neighborhood, obviously a nice school district and so forth, if you plan on having children, So it's things that are good for you, initially. write down what it is that you really need. Make sure you keep your and I hate to quote a rapper on this, but I want to quote KRS-One on this, right?
Love it.
He says, make sure you get what you need. Keep them a safe distance from what you want. It's wants that cause troubles in your life. So you might need a car, right? But you want a Tesla. Get a car. Get yourself a Honda. Get a Toyota. Get the Tesla later after you've acquired the home that you really need, right? Get the home you need. So
I love
hopefully that makes sense.
That's awesome. Thank you. We'll have to, our friend Josh, who helps us with the channel, I'm going to ask, he'll tee up, tell me the name of the rapper again.
KRS-One.
Yeah. All right. We're going to get that like rolling in on this, this part. And I know that was asked specifically to Ray, but I would like to just kind of piggyback on what he said and it's sort of like the same thing he just said, but a little different way is, I call it, let's settle to settle. And I'm not saying give up and, I'm only going to get this, but get that house that isn't your forever home. Do it.
Right.
Not like quit. Like, okay, get the one that's manageable and it's affordable and you can pay a little extra. And you can do some more improvements and some elbow grease, right? Some sweat equity. Like, then that's how you get the dream home. I've seen it since 1998. I've done it myself and still, like, you just go build on to that. Just, get settle, meaning, we'll settle. I'm not saying, give up, don't get what you want, but settle to settle, meaning to go to settlement. That's
my wife's going to kill me for this. I'm going to share a story. So in case you didn't know, I'm not only I'm a client of Greg's as well. So Greg helped me and my wife buy our first home, or our second home, I should say, in 2016. Mm-hmm. We had a home that we bought first back in 2001. We sold that home and we rented for years. And it's okay to rent if that's what's good for you. But we decided to become homeowners again in 2016. And my wife did not want to get this house, but I made her get that house. And we lived there for 3 years. It wasn't the house of our dreams, but it was the house that we needed at that time. In 2019, we got the home. We sold that home. Greg helped us with that too. And we bought a new home in the area that my wife really loved. And now we're in the home of our dreams. And Greg helped us buy that home too.
I love it.
So he's 3 for 3 with me. All right.
Third time's a charm. But
Third
no,
time's
that's
a charm. Yes.
The classic story.
Yes.
Definitely yes. And actually, you mentioned renting. The second part of that question is renters who feel, I'm reading it exact, feel purchasing a home is out of reach. I disagree. I mean, of course, you're going to feel one way or another, but whatever you're paying in rent, you're going to get equal. I see it. Equal or greater house for less money. Correct. Promise you. Even if you pay the same amount in rent, if you pay the same that you pay in rent for a mortgage, it's going to be equal or greater. I know it. I see it every day. And I could be wrong, but you're not going to be sorry.
Right.
So
I was one of those people. I didn't believe that I could get a home at one point until 2016. I really just had to focus. It took us about maybe 2 years once we decided to really focus on getting a home. We probably could have gotten one sooner, but about 2 years, it was the right time for us to get one. So, and going back to even selling that home or getting that home that you may need at first, instead of getting the home that you really want, with the big home, with the big dream home, so to speak. The important thing to know is that most of the time, the home values go up. So when I bought my home in 2016, that home value went up. So when I sold my home in 2019, there was plenty of money to put down that I did not have to save up. That money was able to help me get into the house of our dreams. And the same thing can happen to you.
I love it. And this is what I'm saying. This is exactly what I'm saying. And I didn't tell him that. No, they didn't do it because of me. He did it because they wanted it. This is exactly what I'm saying. Exactly what I'm saying. Settle to settle. Get something now. Build the equity. You're paying it down. Then you're going to want to pay a little more. There's tricks to knock 10 years off your loan without paying a single penny. Well, you have to pay one extra mortgage payment a year. One extra. So pay 13 instead of 12. If you pay bi-weekly, that's every 2 weeks, not twice a week, by the way. But anyhow, there's other tricks. But this is exactly what I'm saying. So, and I'll end that because I got two more questions. I got two more questions after this, but I want to end by saying, don't assume. Just call somebody. There's no fee to talk to him on the phone. I mean, he'll text you at 9 o'clock at night. He'll be available. I mean, we work on the weekends. We're used to working Sunday nights. Like that's like we're busy time. And we get to sleep in Monday mornings. I like to get up early, watch people go to work, and then I go back to bed for a little bit. I'm just kidding. But serious, my point is like ask. Don't assume, well, I can't do that. Please don't assume. Ask somebody, even if it's not us, ask somebody.
Right.
All right. So this is the classic, the rates. Boy. So like, this is the direct question. Should I wait for the rates to come down to buy a house?
All right.
Boy.
It goes back to the last video. You want to marry the house and date the rate. If you can afford the house, you got the down payment, the closing costs, or there's grants and so forth available, go ahead and get the home. Waiting will have you miss out on the home that you want and or need. It's just not worth it. Like you'll be waiting and you're waiting and you're waiting, and then waiting may never come. So.
And while we're waiting, values are going up. He just said it. And it go look historically. Yes, sometimes it comes down, but it is not drastic. It's kind of like this, but it's mostly this way.
Correct.
Up. Low to the left, high to the right. Should you wait for the rate to come down? Maybe. But what if the rate doesn't come down? What if it goes up? What if it doubles again? We don't know, right?
And it's possible.
And it is possible. And that's still a good rate. Like today, you said you got that gentleman, I'm assuming maybe it was a lady. And my sister, by the way, my sister-in-law is a captain in the Army. Bless her, bless you all for serving. That's a 6.25 rate.
Correct.
That's beautiful. FHA's in the fives.
Correct. Yep.
It depends. Anyway, so point being is what? What if it goes up again? Beautiful rates today. Love your payment. How we say it? What is it again? Date somebody.
Play the field. Marry the house, but date the rate. Because you can always refinance later on. So now if you're playing the wishing game or your hoping game that their rates are going to come down, well, you can already have the house, and then we can just refinance you later on when the rates do come down. As I mentioned before, I'm going to keep you on my radar. I already know what your current interest rate is. I already have all your information. So I'm going to just go in and say, hey, you know what rates are? And I'll make up a number. Rates are, 4.5% now. Let me pull up your payment and your taxes and so forth. And I'm going to shoot you an email or give you a call or a text and say, hey, we need to talk because I just figured out how I can save you some money. And this is how. So I'll be doing that proactively behind the scenes while you're at work or, maybe at the game with your kids or something like that. I'll be behind the scenes trying to make sure that I'm doing what's in your best interest.
Go Birds. And go Phils. And that's go right. Sixers, go Flyers, Wings. Oh, Union. Go Union.
Union too, definitely.
We're in full swing. That's a soccer team, in case anyone was wondering. All right. So, yes, I love that. And when I guarantee it's what happened. When the rate goes down, the price of the house is going to go up. Again.
Yes.
So it's the same payment.
Correct.
And I understand. Oh, it's so easy for me to say.
Yeah.
It is a psychological thing sometimes. But so do not wait. If you like the house, do it. You're only going to save money later. If you like the payment, go for it.
Right. If you like the payment. And then on top of that, in the mortgage industry, we pride ourselves in making sure that when we're qualifying you, that means something. That means that we're not going to put you in a house that you cannot afford. So based off of your income, we're going to make sure that we're doing what's in your best interest. So if the house is, and I won't use any numbers here, but if the house is, what some may consider expensive, and it's out of your price range and it's too high from what we call debt to income ratio, then we're not going to put you in that home. We're going to say to you, hey buyer, or hey buyer, I'll say buyer in this case, right? I will say Mrs. Buyer, since you're the one buying the home, that this is the home that you can get in this price range. You can get a home in this price range because of the income that you have. This fits within the debt to income guidelines. Again, you don't have to be a specialist at that. Let us be the specialist at that. And we'll make sure that we get you pre-approved and have you searching within a budget that you can afford based off of your actual income, not based off of a hope. I think a lot of times I hate to give car salesmen a bad name, But sometimes, you know, with cars, you know, you go out and you see a car and, you know, it may cost you $800 a month. You know, they just qualify you, where I'm actually saying, hey, wait, this payment is too high for you. We're not going to approve you, but for this amount, but we can approve you for this amount. We really pride ourselves in that. And I love car salesmen, by the way. So
Oh yeah.
Don't take advantage of me.
Right.
Every car salesman in America is now like a guy.
Right. Or
Get 'em off
yeah.
a lot, yeah.
Or even worse are the realtors, the house salesmen. They're even
God.
worse. They're like, look, it's all relative. So we have this is our bonus question. Then we're going to sign off. So
Okay.
the bonus question is actually, I love it. It's a personal question, and I even loosened my tie if no one has noticed for this one. I'm feeling comfortable, so I don't care.
Loosen mine
Yeah,
too.
this is how we do. All right. So now, this is for Ray. I love it. What is Ray's favorite hobby or pastime outside of the real estate industry?
Oh, wow.
Now, do you have a life outside of real estate? And what is your favorite hobby or pastime?
I do. One of my favorite hobbies is collecting sneakers. I am a sneakerhead, so I have specifically Jordans. I have a lot of Jordans.
Wow.
Yeah.
That's sweet.
They're on my Instagram page too, so you can always go and check. I love to coordinate my I love fashion, so I try to coordinate my ties and you know, my suits and so forth. So
look, even the pocket square.
Yeah,
I mean,
I got the pocket square here. Yeah, so I love fashion. So that's really big. I'm a huge Sixers fan, and I love spending time with my wife and my daughter. You know, that means everything to me. So
that's awesome. That's why that's why his wife wanted to move, because he needed a fifth bedroom for all his shoes.
Yes.
Sneakers. Yeah. And we went to a Sixers game, remember?
Yes,
together?
Yes. I love the Sixers.
We were even in like one of the boxes.
One of the boxes.
Yeah.
Yes.
Dude.
Yeah, I love the Sixers.
And I remember that. I have to see if I have Allen Iverson. He wasn't playing, but he was visiting. He was in the hallway. Correct. Remember that we all went running out into the hallway.
Correct.
That's cool. Awesome. Yeah. All right. So favorite that's good. Awesome. Very good. And I'll answer it even though no one asked me what my favorite hobby is. No, just kidding. But I would like to say, well, this time of year anyway, we were doing some fishing. My family and I, we enjoy it, and it's nice to get outdoors and fishing on a nice like summer day. Like a cooler day is of course nicer, but fishing, and we have a kind of a joke in our family. I mean, it's kind of a joke, but it's kind of true, because it is true, is of all the times that I went fishing, more often than not, I don't catch a fish.
Okay.
And that's kind of like, my kids think it's funny. And of course my wife laughs too. Like, well, why do you do it? It's the idea of it. It's the being together.
Right.
It's quiet. It's you're outdoors and you have the breeze and it's fun. It's very calming. It's the opposite of the real estate industry.
Yes.
It's not fast paced.
Yes.
It's okay if you don't catch one.
Mm-hmm.
But that would be mine, at least for now. I also enjoy watching movies, like family movies. And as my kids are getting older, it's great because we can watch like PG-13 and like we can watch some cool, like, explosions and some. I can show them some movies from my youth, like Star Wars.
Oh. Don't get me started on Star Wars.
The original Ghostbusters. Yes,
yeah,
that's right. You have the I think you had like a Darth Vader watch or something.
I do. I don't know if they can see it right now, but yeah, it's there. Yeah.
That was right. That's cool. Looks like we have another one. Somebody else has joined us. Let me just see if anybody. All right, anybody here? We got any other questions? I'm going to let the ads run because we want to get paid. It's actually Google that's getting paid, and Google owns YouTube. Oh, here you see it. You see the other screen. They're hitting up an ad. That's great. That's cool.
And like you, I love movies too.
Oh yeah. So while we're letting that ad play, because Google, we want to make sure they have their lunches. We're gonna cut this. Excuse me. We're gonna end it here within about a minute or so. If anybody has any last minute questions, otherwise this will be recorded. The end of the stream, we'll have it live it'll be on our channel. Check it out. We'll have all Ray's information. His info will be there. Mine is there, of course, and we're taking off our ties all the way now. That's it. Yeah.
There you go.
Whew, this is right. We're getting about 10 minutes to 2 o'clock. But anytime you want us to do this again, we're happy to help.
Yes, absolutely.
We don't have to be in this atmosphere to do it. if we didn't answer specifically what you needed, I mean, there's tons of questions related to this, but throw us a scenario. Let's do it. Anyway, I'll sign off here in about, I don't know, 20 more seconds. If you have anything to add, appreciate you being here.
Right. So what I want to add again is just I want to thank Greg for having me here. It means a lot to me. He's been a great realtor and a great friend at this point as well. So
Definitely.
So if you don't have them, use them. So
thank you. Checks in the mail. Let me slide $20. But no, seriously, work well together.
Yes,
and
definitely.
All right, I guess that's it. I'm going to check one more time for any new questions. I think we're good. And ties are off.
All right.
Yeah, that should be it. All right, cool. All right, everybody, have a great day. We'll
All
see
right.
you on the next
Thank
one.
you.
Thanks for coming out. Take
All
care.
right.
Bye.
Good.
Ending stream. 3, 2, 1. Stream immediately and will no longer be live. Bye-bye.
Bye-bye.